Hey guys, Frank Curzio here with another live video, and I want to show you one of the ways I find the best stock opportunities. So this is going to be a little bit of an educational segment. May take a couple minutes. I'm going to go through it really quick, but I want to start with sharing my screen because here's a report from today from Bank of America. Bank of America reports every week they come out with this equity client flow trend. So the money flowing in and out of stocks in different sectors. And it's important. This is one of the things that so many great analysts are looking at, kind of using as a contrarian indicator. Let me explain. So right here, some of the interesting things that I highlighted. Both hedge funds and institutional clients were sellers for the ninth and second consecutive weeks, respectively. Hedge funds, 9 straight weeks of selling. What does that mean? So when I look at the hedge funds, that they're on the wrong side of the fence right now, meaning when you see days like today, where any good news, whereas retail sales and the steroid drug, you're going to see stocks surge or they'll go up, and you're going to see a lot of short covering, right? Because these guys are on the wrong side. It also tells me that that's money that could flow into this market because they have to play catch up and they have to beat benchmarks. That's just one way of looking at it. Let's go to the rest of this. I want to break this down, not take too long here. So how do I find the best ideas? So outflows are large, driven by tech, which you kind of know, right? We're seeing rotations, but look at industrials. The second largest outflows last week had the longest selling streak. 6 straight weeks industrials have been sold. So for me, I want to look at this sector to see if I can find any ideas. Now I'm looking this, right? It's so clients cumulative flows by client type. So it's separated by hedge funds right here, institutions, and retail. So if you look at institutions and retail, kind of flat, but here's more evidence that hedge funds have been selling, maybe even going short here, which is money that can come back into the market, but they are net short. So, it's just interesting to see that trend so low with the market going higher. Now, let's cover a couple more things here. I try to keep these videos really simple. Go right to a page here. Let's see. Okay, so one of the other things I want to point out is this is the equity ETF 4-week average. Okay, Bank of America does a great job keeping this data. Now, right here I highlighted is how, look at all the money coming in, right? So this is from 17 to now. This is on a quarterly basis, 4-week average. But here, if you look at the last month, 2-3 months or so, a lot of money has been going into large caps. Now, what does that mean? When you see a big bull market like we're seeing, I don't care if you want to call it a bull or inside a bear market, whatever, but when you're seeing stocks go higher this much, usually small caps, mid caps outperform large caps. Usually. It hasn't happened in this market. So yes, we've seen in the past couple of weeks, but look at mid caps compared to this, right? It tells me that you're going to be able to find a lot of ideas in small caps, which is underperformed, still underperforming. And yeah, we've sold. If you're looking at consumer discretion, they break down every sector here. I'm talking fast to get through this, but ETFs is the blue line. So more money going into ETFs, and look, single stocks down here. You look at energy, a little different, right? So people are trying to buy individual stocks that they see that can provide an advantage for them. Now, if you look at financials, look at this. So this is telling you that a lot of money is going into few stocks, probably the largest ones, right? Which makes sense. And maybe they don't want to really buy the basket because underneath, it's not as good when you get out of the 5 top that are going to see the biggest benefits like they do during every crisis. They get bigger. But take a look at industrials, because industrials is an area that I think you can find a ton of ideas. So ETFs, right, this tells me a lot of money is going into pretty much the bigger names, but single stocks, look at how much this has come down and continues to come down. So what does that mean? I want to look at industrials. It's kind of a contrarian indicator. There's a ton of money coming out of industrials. We're seeing a market where everything, even the crazy stocks are catching a bid, even bankruptcy stocks. When I look at this, it makes me want to look at industrials. It also makes me want to look at real estate, which has a similar chart here. Single stocks starting to come back. Mortgage rates, all-time lows below 3% for a little bit. We just saw positive data of read-through through homes. So real estate, I'm looking for ideas because those single stocks have been incredibly out of favor, and same with industrials. And in a market where the Fed just said, hey, we're going to keep printing trillions and trillions of dollars, these are 2 areas I'm looking at where you could find some cheap stocks in a market that's up tremendously, and a lot of names are trading at premium valuation. So hopefully this helped. I like to keep these a little shorter, but a lot to cover. Great job, B of A covering this, but this is the type of research I have access to, and you see a lot of this stuff show up in my newsletters as well. Questions, comments, I'm here for you. And like always, I'll report back to you. Take care.